Flip. Breaking news. We have canceled job reports, economic uncertainty, credit card debt, and banks. Let's jump right in. So, the first article we have from Reuters is US canceling October's employment report after shutdown prevented data collection. Which I don't blame them. They didn't have access to anything while government was shut down. We also have the government reopens, but economic uncertainty lingers. What consumers should know. So, according to this article, we have although September's employment data collected before the shutdown is expected to come out soon, the added uncertainty comes as new tariffs on imported goods could push prices up on everything from toys, electronics, clothes, heading into the holidays. So it looks like we're going to be a little tight this Christmas, Santa. We also have your guys' credit card debt. You guys been putting everything on the card and not paying it off. I wouldn't blame you. But we have a mountain of credit card debt. 1.233 trillion to be exact. These records balances are light years above the 478 billion seen more than 20 years ago in quarter 1 of 1999. So you guys are putting everything on the card still. We also have the consumer credit card and other revolting plans in all commercial banks. So, this means we have a lot of credit revolving around in the banks. As you can see, we are high. We did drop a little bit down earlier in the year, but so far it's still pretty high. Needs to come back down a little. We also have job openings. It shows you guys are around the same amount of openings as 2020 when right before we started crashing down, it looks like. So, strong economy. We're doing great with plenty of jobs. So, here we have your banks, the regional banks. The symbol is KRE. We are looking at it on the monthly time frame. Now we have a head and shoulders pattern, which usually plays out to the downside. We have a measured move of dropping down to what is that? 7.30, $7.30. So that is only if we break this bottom line. As you can see, it'll take a while because we're on the monthly time frame. So now we have the 2-year bond. You guys are like, oh, well, if the Fed cuts rates, everything should get better. Well, newsflash, the Fed can't set rates to whatever they want. They need to follow the 2-year yield since it is the highest yielding yield on average, which is why they follow it. If you guys want to see where they are currently at, let me pull it up for you. So the Fed is this orange line. As you can see, if in the next report the yield stays down here, we will have a rate cut, but that doesn't really mean anything because you can see already before they cut it that they're going to cut it as long as it stays down here. We also have the 10-year yield, which is what most rates follow for homes and all that. So, you guys were thinking about refinancing, probably think again because if you look at the chart, we have the inverse of the other head and shoulders. So this one is saying we are going up. And you guys can expect a rate of 4.372 if we break to the upside, which seems pretty likely because this pattern usually plays out. We also have the main market leader. And you guys are like, well, stock market went up today. But I want to tell you guys we have our leading market. This is our one man who holds up mostly everything, man or woman. We'll just say stock. But as you can see, this is a broadening wedge. You guys broke the support line. You guys should be heading lower. Today went up because earnings. But you guys have a measured move of going all the way down to about 160.83. But I have some good news. Not everything is in the toilet. We have this 200-day moving average. When you're above it, stocks stay bullish. When you're below it, stocks stay bearish. So here, you guys can expect just the pullback on Nvidia, and as long as we don't break that 200-day moving average, we should still keep moving up. Now you guys are like, so Bitcoin should go to the moon since the main market could possibly bounce and go up higher. Well, to be perfectly honest with you, Bitcoin was in a giant bearish pattern which broke out a few days ago. Now, if you guys see here, I like measuring from here to here on the back. Some people like measuring all the way back, but that's getting a little too greedy. But you can go ahead and move this price target over to here, and your price target right now is 57,742 and 81 cents. Will it go there right away? No. It will most likely pull back until it gets overextended, and then it will come up, have a little bounce, and then probably cause another pattern telling it to go down. It's just how it flows. We also have VIX, your volatility index. When this goes up, it makes everything go more volatile. You can also see it when before stuff crashes, this loves starting to curl up. As you can see already in the chart, we are starting to curl up a little bit. We have this indicator down here, which tells us our momentum and everything, that it is going up. Usually, VIX likes staying down because it eats itself. So it going up is not very good. We can also pull up our 200-day moving average to see, oh, we're above the 200-day moving average, which means it has support going up, which is not very good. Finally, we have the dollar. This is the symbol DXY, tradable symbol UUP. We have the dollar going, looks like in the upward direction. And our indicators, it looks like we're curling up. And on the 200-day moving average, oh no, it looks like we have a slight candle close above that 200-day moving average. Now, what does that mean? Well, if you think about it, when Bitcoin goes down, because it is a speculative asset, not everybody completely trusts it. So when it starts going down, that means we're starting to have less liquidity out there. When the dollar starts going up, that means people are starting to get a little freaked out. So this just means we might see a sell off in the main market. We might see major news headlines talking about that, but we will see. I'm pretty sure in January we will have a beautiful news event that will cause the market to crash. I really doubt that it will happen in December. And now you guys are wondering, what do I do now? Because everything's bad. You're showing me everything's bad or everything's going to be bad. I can't afford anything. My credit card debt is through the roof. I can barely breathe out here. Well, the simple answer is go wash your neighbor's trash cans and charge $15 per trash can, aka start a business. You can also, well, for my investors, you won't like this advice. You guys can learn how to trade. You guys can learn for free online. Pretty sure there's places out there that you can learn. Or just stick with a business. Either one. It's hard starting a business though. It's also hard trading. But other than that, I hope you guys take one of those two advices, start business, trade equities, and I will see you guys Friday.